Ryanair and easyJet, two behemoths in the European low-cost airline industry. However, you need to know whether it's worth you investing in these two stocks to see huge returns in the following years. That's exactly what we're going to go through in this video today. Now, Ryanair's one UK share that is not for the faint-hearted, but to be honest with you, currently no airline share is. Rising COVID-19 infection rates all over Europe are preventing the aviation sector from recovering. And with the crisis only worsening over time, you will likely see more airlines going out of business. That being said, those of us who buy Ryanair shares right now could be significantly rewarded when things go back to normal. It has one of the strongest balance sheets in the business and will be one of the biggest beneficiaries in a downsized European aviation market when the dust finally settles. Many airline stocks jumped this past week after rumours grew of a new COVID-19 testing measure that's been introduced to UK airports this month. With airport testing across Europe taking place, such as the one in Turin's airport in Italy, this will likely be implemented across all the countries in Europe in an effort to catch the deadly disease before it enters the country. Ireland also has put the possibility of introducing the airport tests as an alternative to quarantining. Ryanair expects Boeing's 737 MAX to be rolled out across the US over the next month or so, paving the way for the carrier to start receiving planes in early 2021. Eddie Wilson, the chief executive of Ryanair's main airlines business, hopes that the company will start taking delivery of the new aircraft by early 2021, with them having ordered 135 just before the aircraft was grounded. The Ireland-based carrier reported a 64% year-over-year plunge in September traffic to 5.1 million passengers. Ryanair operated approximately 51% of the normal September schedule, with only 71% of seats being filled. On a rolling annual basis, total traffic at Ryanair declined 49% to 74.4 million passengers. While the FAA were the regulatory board overseeing the fixes made to the MAX by Boeing, they aren't the only regulatory board that's actually putting the 737 MAX's modifications through its paces. EASA, which has started its own testing program last month, has stated that a clearance from the FAA will not automatically guarantee that the plane is airworthy in Europe. A company which has a great air transport subsidiary is Amazon. Why don't you click on the pop-out banner above and see why you should invest in Amazon right now. And while you're doing that, don't forget to hit the like button, subscribe and turn on notifications, and help me reach 100 subscribers before the end of the year. Let's see if we can do it. Now, jumping over to easyJet, their Q4 was grim. In fact, the airline made a loss of £300 million. Last year, they made a profit before tax of £528 million. Revenues were 73% lower, and the number of passengers that flew with the company were down 63%. This means that the company is in line with a full year loss for its first time ever in its history. I also believe that easyJet has managed to weather the storm a little bit better than some of its rivals, such as IAG, who own British Airways and Iberia. The company has managed to raise £2.4 million, which should help it to survive the next couple months with such liquidity. The downside, their total net now stands at £1.1 billion compared to £326 million last year. Consequently, Morgan Stanley estimates that the company has less than 10 months of liquidity to stay afloat. This could force the company into issuing more shares or selling more assets, which both have a negative impact on the share price of easyJet. So, what's next? Unfortunately, the future doesn't look much brighter for easyJet and could see the stock price drop even lower. In Q1 of 2021, easyJet expects to fly at 25% capacity. This is due to a number of restrictions in the markets that the company operates in. On an industry-wide basis, a full recovery is not expected until 2023. On the other hand, easyJet shares could be boosted on news that the early 2021 summer bookings could be in line with previous years, but at this rate, that will be unlikely to happen. As a result, a recovery looks possible for the budget airline, regarding that it survives the next few months. Now, would I buy easyJet or Ryanair shares? Looking at Ryanair first, as of now, I would wait until its earnings report on the 2nd of November. It is an attractive company to buy and has a very strong and long-standing management, but it could dip further before we see any gains, so it is definitely one to keep an eye on over the next couple months. As for easyJet, the shares do look very cheap, and it has performed very well in previous years, so I do believe it will survive the crisis. Unfortunately, survival doesn't necessarily mean that it will thrive in its market. Not to mention its high debt, the stock is currently not a buy. With less people travelling and staying at home, social media usage has increased massively. So why don't you check out this video up here on why you should invest in Facebook right now and add it to your portfolio. As always, don't forget to follow me in this journey to economic independence, and I'll see you next time.